Okay, so good morning, everyone. Welcome to today's macro snapshot. We are Thursday, November the 9th, 2023. I'll keep it fairly short today, guys, because there's not, to be honest, a huge amount which we can say. The first thing I would say is that yesterday, today we have Jerome Powell speaking at 2 p.m. on I think it's a panel at the International Monetary Fund. So that could be interesting. Is talking about the challenges of monetary policy. So if he does want to push back on the markets, sort of slightly sort of dovish reaction over the last week or so, this is the opportunity. So really what we want to know what he thinks about sort of yields, whether he thinks what he thinks about any easing of financial conditions, if he believes that the economy is weakening, any hint obviously about a further rate hike, one more in the cycle, or whether they're actually done, any sort of sense of the timing, just all of that kind of stuff. But I think just from a sort of a sentiment sort of point of view, if we look at, let's say, something as simple as, let's say we look at the VIX, we see that the volatility is down very, very low here. And just by the way, talking about the VIX, just looking at some analysis, it's been down 8 days in a row, which has only happened once or twice in the last 50 years or whatever period. So the point is that the VIX is at a very low thing here. So it might be tempting at some point here to sort of start going long volatility, or at least when I say go long volatility, if you want to hedge anything, sort of long gamma, so long puts or any kind of long calls, this is a very attractive moment to do it. You also see that gold volatility here is down quite a lot. We see that OVX, which is the oil volatility, has also come down a little bit as well. But the VIX is really at an interesting point here. So the market seems very calm. And if we look at, let's say, the SPX, just the cash index, but it's the same thing on the futures here. We were talking yesterday to say that this was a key level. It's still a key level. That's the point. There's nothing much has changed. Yesterday was a little bit of an up day, but not really a huge amount there. So I think the market is waiting on Powell and just a little bit confused now, like what happens next. If Powell is dovish and essentially says that, there won't be any more hikes, that he's okay with the easing of financial conditions, that hasn't eased too much, that the yields are in a good space. I mean, maybe here, the equities can punch to the upside. And as we saw, the volatility is very low, so that won't be that if anything will be sort of a tailwind. On the other hand, if he comes down hard and says that absolutely inflation is still a problem, there could be another hike, that real yields, need to go higher, et cetera, anything which is kind of hawkish. Of course, this is the perfect sort of level for the equities, same as NASDAQ, to sell off. And don't be confused by this, guys. Of course, yesterday, although in the SP 500 we had a bit of an update. Again, just keep your eyes on this sort of relative strength here, the RSP, which is the relative strength, the equal weighted index, which doesn't include the Mag 7, the big 7 stocks. You can see that actually has been falling a little bit. So underneath it all, the equities I think is still, I'm not going to say weak, I'm going to say fragile. And the point is that they have had, again, historically, a very large rally over the last 5 days, 5, 6, 7 days now. And so you've got to say that at a certain point, that's probably getting a little bit tired. And in fact, talking about that, it might be kind of interesting just to have a quick look at, let's say, something as basic as the RSI. Where is it? The RSI indicator. Hold on, that's a bit strange. Where's my favorite indicators gone? Sorry, guys. It looks like it's loading up. Sorry about this. That's odd. Okay, maybe we'll just put it. Okay, it looks like it doesn't want to load up. But anyway, the point is that I think that's probably being, just check your RSI. It's probably getting quite high at this point, maybe just flattening out now a little bit. Apart from that, the other thing which is interesting is the 30-year auction. Yesterday, we had the 10-year auction, which actually tailed by almost a basis point. And normally that would have caused an adverse reaction, but the underlying metrics are relatively good, quite a lot of indirect demand, which is a proxy for sort of foreign bank demand. And it was interesting that the bond market, the 10s, if we look at, let's say, the 10s, they actually, it's not that they had a huge rally, but they didn't fall on that. But again, the bond market, you've got to say, is that getting a little bit overextended here. We've had a nice rally in the 10s. We've had a nice rally in the ZB. Now, can that go up more? Yeah, for sure, can go up, let's say, to this 117.24 level, which is a long-term historical level. So can it go up more? And I've been reading quite a lot that a lot of people are saying, I think there's a JP Morgan report saying that the CTAs have a lot of sort of dry powder. They could sort of, just keep on going and going with the momentum and buy a little bit more here. When I say CTAs, I mean like the systematic kind of quant firms. But having said that, again, the heavy issuance, see what Powell says in the issuance at 1 p.m. All it takes is a very weak auction, and in a flash, this 30-year could be down a bit more. And as we know, if those yields go down, that's going to be sensitive for things like NASDAQ, which won't like that. So again, I don't have too much to say. I think it's just a question of the 30-year auction. If that's well received, that could give the green light for more of an equity upside. And of course, then we have to see at 2 p.m. So that around 1 to 2 p.m., that's going to be kind of key today. Other things to be looking out for here. Just want to keep an eye on oil here. Oil, let's see if my if my indicators have come back. No, still not there. Basically, at this point, oil is looking as though it's completed this measured move down here. We do have an interesting level on the CL1 contract at 73.90-ish. This kind of level down here. Could oil bleed down a little bit more? Absolutely. We all know that oil's capable of anything. But what we are starting to see is the first little green candle here, although it's not really much of a green candle. Let's see what happens. I personally am already long a little bit, got long yesterday around about here. Hopefully that goes up, of course, from my perspective. But to be honest, it would not surprise me if it goes down here. I'll probably add another part to the position there. But to be honest, if it goes too much, it could then break stops. But I think anything below, let's say $73 there's a bit of a danger sign, and it could kind of flood down a bit lower. We know that OPEC Plus is going to be looking at that. We have an OPEC Plus meeting coming up this month. Let's see. But just interesting, keep an eye on oil there. Again, the calendar spreads and the curve is not looking great, but maybe it's just, that's kind of the worst of it. If we look here, let's say the calendars, just the curve here, we can see that, as I was showing you guys yesterday, it's really flattening out here. It's not really in a contango just yet, but we're getting close. And if we actually look at the CL1 minus CL2, which is the two front contracts here, and we go back a month, you can see that that's just been grinding down. It was over $1, let's say like 2 weeks ago. So, and as you guys can see, in the last 4, 5, 6, 7, 8 trading sessions, is grinding down, and now we're basically flat, 0.1, like 1 cent different. Now it's pretty incredible to think that a couple of months ago that was at was up at $2 or so over $2. So that's not looking great. The actual shape of the curve is not looking great. But having said that, oil has come down a lot in the last couple of months. So maybe this is the point where the Saudi Aramco, the buying machines start whirring and they start sort of supporting the market. Maybe we'll start getting verbal intervention. We had some intervention yesterday, well, not an intervention, we had a comment yesterday from the Saudi energy minister saying that speculators were to blame. And we know in the past that he's wanted to cause ouch, as he says, and pain to speculators. So I don't know. We'll see what happens. I mean, who knows? Maybe we'll get some kind of sort of verbal intervention at some point, some kind of unilateral cut, some kind of surprise to shock the market. I don't know. Probably that's going to wait until the OPEC Plus meets. But I think oil, at this level, I mean, looking at demand, there's been a lot of sort of sentiment. People are saying, oh, demand's going down and everything. But a lot of that's just sentiment, because if you actually look at the numbers, they're reasonable. One could argue that China is not doing great, and I have to say that overnight we got numbers from China. We got the let me just put it in. So we got the inflation data from China, and the problem here is let's have a look. Just quickly put this in. China. The problem here is that we need to go back a day. Is our first problem. That, as you say, the CPI here, guys, minus 0.2, deflation, minus 0.2. You look at the PPI, producer price index, is minus 2.6. So both of those numbers is pointing to the fact that like China is in a deflationary kind of cycle at this point, which all things considered, even if we just want to simplify, is looking like the economy is slowing down. It's contracting. It's certainly not expanding. So anytime you see deflationary numbers, generally it's not a good sign for the upcoming quarter or two of growth. And of course, this is being sort of shown in things like the regional currency, like the Aussie dollar under pressure. We also see oil. That's the point. Oil, if the Chinese economy, which takes up about 19 or 20% of global demand for oil, if that looks to be slowing down and seems very much to be slowing down and in a deflationary kind of cycle, that's maybe not auguring well, at least from a sentiment point of view for oil. And that's what I'm trying to say, that oil here, maybe it's not going to sort of go too much lower, but I'm not sure it's going to rip. So I will be keeping an eye on my trade here, which is in an option kind of structure. Don't want to let the theta burn out too much on that one. We'll see. So just talking about the data here, guys, may as well just have a look. We do have a little bit of data. It's been a very, very quiet week, but of course we do have initial jobless claims coming up in about half an hour or so. That's still pretty solid, 218 or so, just creeping up a little bit. But what is interesting, the market's starting to look at continuing claims, which is starting to go up. And continuing claims is interesting because it has this idea that if one does actually lose one's job, it's taking longer to find another job. And that wasn't the case, let's say 3, 6, 9 months ago. People who did lose their job were finding that they could, find another job very, very quickly. But that continuing claims number is slowly trending upwards, which would indicate a labor market which is slowly softening. And indeed, a lot of the Fed speakers we've had over the last few days have been sort of pointing to the fact that the labor market is getting more in balance, as they like to say, which is a sort of a code for weakening a little bit. So let's look at all of that today. The final thing I just want to have a quick look at here, guys, not a lot going on in the markets in terms of price action. It's been very low volatility. We continue to see gold just bleeding down a little bit. This is the GC1 contract. Again, nothing sort of crazy, but it just seems to be bleeding down a little bit. We've got a US dollar, which is sort of okay, but nominal yields have been coming down. So I think at this point, maybe this was just all of the short covering, the war premium for the events in Israel and Gaza, probably a bit of profit taking. To be honest, we know that there's a lot of central bank buying, so it would not surprise me if oil, maybe it's going to drift down to, this kind of level here, 1924 on the GC1 contract. But at that point, I don't expect it necessarily to go all the way down. I mean, you could maybe start throwing on a couple of fib levels here. And as you guys can see, we're almost at the 38% fib retracement here. So there could be actually a little bit of support coming in relatively soon. I wouldn't want to push that. And as I say, I personally, we're short here. So might be time to take off a bit of the position there as well, just because you don't want to push your luck. But if it goes through there, it could, I expect it to maybe stabilize around about here, which coincides with the 50% retracement of this move upwards there. Okay. All right, guys, we're going to leave it there. That's it. Probably the highlights today, as I say, could be Powell at 2 p.m., preceded by the 30-year auction at 1 p.m. Keep an eye on that, see how that goes. How the market reacts to that. And by the way, we know that yesterday it did tail by almost a basis point, but the market didn't really rally, but it certainly didn't sort of fall off a cliff. So maybe there is a little bit of underlying support here for the treasuries. We shall see later on today. Okay, guys, I hope that was useful. Take care, and we'll be talking soon again. Thank you.